What's up, peeps? Nick Battle, aka NinosCorner, man. First off, if you like this content, comment, like, subscribe. Means a lot, helps the channel grow a ton. I love giving this information to you guys as a real estate agent because it helps people, when it comes to buying their first home or buying a second home, vacation home, anything. So we're going to talk about the loan vehicles that you can use to purchase a home, and I'm going to talk about the three most prevalent ones out for home buyers. Well, the first is a conventional loan. The second is an FHA loan. And the third is a VA loan if you're a vet and actually qualify for that. So let's start off with the first loan, a conventional loan. A conventional loan, folks, is a loan in which you usually hear people put 20% down on the house. Yes, you can put 20% down on the house and not have to pay any PMI, private mortgage insurance, which is what separates a conventional loan, a standard conventional loan from an FHA loan, which we'll talk about here later on. But you won't have to pay any private mortgage insurance, which is something, it's a tool that aids the lender to assure that if you default on the loan, it backs them basically. So you don't pay any PMI if you put 20% down. So if you have a house that's $300,000, you put 20% down, which is $60,000. That means that you're going to borrow $240,000 from a lender. You do that, let's say, for instance, the interest rate at the time is 3.5% over 30 years. And let's say taxes are going to be $5,000 a year for that property. Your payment for that home is going to be about $1,600 a month. Okay, that's principal, that's interest, that's no PMI, that's taxes. Yeah, and that's be it, principal, interest, and taxes. So you pay that. That's going to be your monthly payment over 30 years, assuming $5,000 a year in taxes and also assuming an interest rate of 3.5%. Now, if you do the flip side of that and use an FHA loan, where you can put it slow down as 3.5%, put down 3.5%, that's $10,500. So that means the lender will be lending you $289,500. The LTV, which is the loan to value rate, is less than 80%, or is greater than 80%, which means that you will pay some PMI, that private mortgage insurance. Now, if you do the same graphic, 3.5% interest rate, $5,000 a year taxes on a $300,000 house where you have to borrow $289,500. Your average payment over a 30-year time frame is going to be around $2,100. So a big span right there, folks. $1,600 to $2,100. That's $500 extra a month if you only put down 3.5% as opposed to 20%. Okay, that's because a lot of that goes into the PMI. Now, there are ways that you can not get this PMI, and I'm going to talk about one if you are in this category. If you're a veteran and you've met the criteria to get a VA loan, I think that this is the best of both worlds. You can put as little as 0% down, 0% down, folks, 0% down. And have no PMI. So veterans who do not have to pay PMI in their loans. But what veterans do have, folks, in a VA loan is a VA funding fee, which the first time you use it is 2.3%, right? So 2.3% of $300,000 is $6,900, if I'm not mistaken. But you can roll that amount of money into your loan, but no PMI. So this is a big thing for vets. So you can finance the full $300,000 plus the $6,900 from the rolling in the VA funding fee, or you can pay out of the pocket. But if you roll it into the VA, if you roll the VA funding fee into your loan payment, you're looking at $306,900, no, $306,900. No PMI, assuming a 3.5% interest rate over 30 years and $5,000 a year in taxes, your payment is roughly going to be $1,850. So $1,850. So you're right in between a standard loan in which you're putting 20% down and an FHA loan, which you're putting only 3.5% down. And with a VA loan, folks, you're putting down is 0%, but just adding in a VA funding fee, and you're right there in the sweet spot of $1,850 as opposed to $1,600 for a conventional and $2,100 for an FHA loan. Now, there have been other questions being asked about the FHA loan and the PMI, and can the PMI ever be taken off of a loan? And that answer is yes. It can be taken out of the loan if you can prove that the amount of money that you owe on the house is 80% or less than the appraised value of your home. So if your home is $300,000 and let's say it's stagnant and it doesn't grow in value, which we know that that's not going to happen. Homes appreciate in value, right? So will usually appreciate in value. So if you only put down, let's say 10%, right? And the 10% is $30,000, and you finance $270,000. Now, say over 7 years, you end up paying it down, and now it's $230,000, and your house is still worth $300,000. Your LTV, your loan to value rate, is less than 80%. So you can call your bank and have them and request to have your PMI removed from your loan. So yes, you can definitely do that to assure that you do not have to pay that PMI the entirety of your loan. But those are things that you can do. I was able to, with my prior home purchase, I purchased a home using a loan where I only put down, I think I put down 10% of the purchase price on a second home. And with my lender, I was able to basically only have PMI in the loan for I think the first 5 years, and so the PMI is very cheap for that house. It's like $23. So some of the lowest PMI fees that I've seen. So I said, what is $23? It's nothing, right? So after 4 or 5 years, the PMI goes away from that loan, and I'm just paying principal, interest, and taxes on the house. So those are the three different ways that you can get a house, guys. Three of the most prevalent ways in which you can get a house. If you're a veteran, I highly urge you to use the VA loan because it does save you money. 0% down, you can be using that 20% if you're going to have excuse me, a standard conventional loan. You can use that 20% and invest it somewhere else or buy some more property outside of using a VA loan. But on that note, folks, man, I appreciate you guys tuning in. I'm going to end it like I end all my podcasts, guys. Do you. Don't be afraid to fail. Outgrow your environment. Understand your brilliance. You see it on the hat. You see it on the shirt. And on that note, man, Nick, Nino's Corner Battle. I'm out. Peace. Deuces.